Hi, Shreyas. I just had a couple of questions. So, first is, I don't know if you talked about it earlier, but you were trying out some positional system, right? Can you talk a bit about that? Are you doing that? Because I'm sure you would have done that when you started your trading, right? And there was a reason that you moved away from it, and then you only started doing intraday. So, are you doing that? And if somebody like me, I don't trade expiries because I have a full time job. But then somebody like me who has to do positional, what kind of advice do you have? First of all, which index? Bank Nifty is obvious, which comes to mind. But then, any advice that you have for someone like me who wants to do positional?
So, like at the onset, I used to do positional trading, fully like naked positional trading exposure, that kind of a situation. But I did diversify into like everything from stocks to index and all of that. So it was primarily like monthly trades. The reason I got away from it is because like COVID was kind of a massive realization that dude, I got lucky and I survived. Luck will not take me forever, because a lot of people who traded pre-COVID, you don't hear much of their story, because whenever something bad happens, right? Like most people, they never talk about it. Many don't know the kind of devastation that that had on people. So after that, I was like, yes, like hell to this. I'm like just going to be trading intraday. That's how I got into intraday, primarily because of the fear of what naked positional trading could do, and somehow hedged positional trading was just not as attractive at that point. So I'm like, okay, if I can't do either, I will trade only intraday. The reason I then started pivoting again away from intraday is just due to the operational risks that started propping up, be it like with free trades, or be it with broker going down. Once your exposure is large enough, you will start like feeling really, really scared. It's not about losing some money to like an issue that happened. It's about, oh, what is the worst case scenario? So because of that, recently I've once again started experimenting with cross trades, which is primarily like, think of it as calendars between Fin Nifty and Bank Nifty, for example, when you have two back-to-back expiries. So that is one kind of calendar. Then you have Nifty Sensex, which is another kind of calendar. I have generally I have some long wall stuff that I do on mid cap. So stuff like that is what I'm experimenting with. To be quite honest, so far I've not really found anything that is like, wow, there's a big edge over here. But it's still in the process of experimenting, because, as I said, I want to reduce exposure to high churn, high leverage expiry trading. I trade expiry something like a one lot for 3 lakhs or one lot for 4 lakhs, stuff like that, so that I'm not at the edge of my seat. And I don't mind losing money to the market. Like, I've never had a problem losing money to the market. I'm more afraid of like, for example, today I post that validation pending order. Nothing happened. I didn't lose any money on that. It went off after 30 seconds. But my whole thing is, what if something really... See, let me tell you something else. Cracks in systems don't show until something drastic happens. What do I mean? Let's say it's the exchange, or let's say it's the broker. You'll find most of the time technical glitches happen at the worst time. And that's very simple, because that's when the load goes up. And with so many people trading, with so many people being stuck on like 2-3 strikes, whenever the load goes up, it's just too scary for me. So my idea is, I will trade less quantity in this daily expiry thing, and I will push my trades across. Now, in terms of, okay, if you're building a positional book, how do you do it? Ideally, you can, even if your book's exposure can be high, provided it's diversified into enough things. Like, let me give you an example. You can have some long wall trades at 2024 December end. Like, you can create a ratio back spread in like the indices, for example. If you're having short wall trades on shorter time frames, let's say you're trading iron condors and stuff like that. And I'm also, my positional trading is fully hedged. I don't do naked trading, because that'll just not let me sleep. So it's like, okay, let's say you have some weekly trades. It could be in multiple indexes. You have some monthly trades. You could have SSO. You're trading in like some amount of stock options. You can have setups. And ideally, you want to not only be diversified across instruments, you also want to be diversified across wall exposure. It's not like you should be short wall on everything. The idea there is that, not that you're trying to maximize your return or whatever. It's that you want to have a more smooth equity curve, and that's only possible if you are not only diversified in instruments, but also diversified in your volatility exposure. And ideally, depending on situation, like in current situation, I would prefer to have like long vol in a larger time frame and short vol in shorter time frames. So there's no hard and fast rule, dude. If it was that easy, everybody would be doing it, right? Like, yeah, the main thing is reduce exposure to daily expiry and build a book which is like a balanced book. And yeah, but this is, once again, as I said, this is my current take and my current approach. I don't necessarily think it will be the best for anyone else. Like there might be people who are making much better returns and much whatever, but it's also important what are your goals. My goals are, I don't want to take stress, because I see myself 20 years later also doing the same thing. So I can't be burnt out by then. Even if something's making more money, I would focus on what is giving me less stress. And yeah, if I'm like glued to my screen trading at like 5x, 6x notional exposure, expiry, milking everything till the end and all that, then I don't see myself being able to do this for more than 2-3 years if I continue to, like, for example, let's say how I was trading in 19 and 20. If I continue trading like that now with everyday expiry, I'll burn out in 2-3 years max.
Yeah, thanks a lot, Shreyas. Helps.
My pleasure.